Let me ask you this. If you had to choose one, let's say break even or negative cash flow, slightly property in an A location, waterfront, Miami, Fort Lauderdale, one of those types of places, or tertiary market, no appreciation, cash flow positive at whatever, 10% cash on cash return or something like that. There's no in between. You have to pick one or the other.
So it's just that little tiny...
it's like a town.
It's just a little town in Italy. That's all it is.
But it's on the coast. It's very unique. It'll
nice
never be
beaches
replicated.
or anything?
Popular beaches. They're rock beaches, right?
Okay.
But there's like a club there, a beach club that like famous celebrities go to. Right.
Is that right?
Right in, I think it's in Positano. So there's like different cities, right? There's Amalfi, Positano. They're all the same.
Okay.
The hillside homes. But my point is irreplaceable real estate can never be replicated. Severe housing shortage relative to the demand. Why do you sell other than you got scared out by some temporary glitch in the market? Now that I like to translate to what's happening here in Canada and across most major cities and whatever the case is, which is we're short housing significantly. It's going to be irreplaceable. You've been seeing all the stuff that they've been announcing. It's all based around building rental properties, right?
Now
5% GST. We predicted this, right? Go back on our podcast for 3 years. We're like, luxury properties and rentals. That's all that's going to be built. There's going to be no affordable housing. Middle class is going to get priced out, blah, blah, blah. So because it's going to be so hard to replicate these houses that we own or that other people own, why do you want to sell it other than you're scared about something that's probably a temporary glitch right now, whether it's rising rates or politics that's scaring you out, whatever the case is. So any touching points on all that there, like what are your thoughts? How do you translate it to what we're experiencing here?
So I have seen a lot of talk about the whole, construction of rentals and things like that. And I know it's firing up a lot of people saying like, why are we focusing on rentals versus affordable housing? Because you can't produce affordable. It's a misnomer.
It's a scam.
Yeah, it doesn't. I'm not even sure if that's the right term, to be honest with you, but something along those lines. It's an oxymoron.
Yeah,
it's an oxymoron. Affordable housing is an oxymoron. You can't produce it. The only time affordable housing works is when there's tax credits involved, like the United States. The government gives you tax credits for producing affordable housing, which is not affordable. It's affordable because of the tax credits. And nothing like that here in Canada exists. Why would a developer produce product that is arguably not much more to produce from a luxury scale, but they're going to get 2 to 3 times the amount of rent on a product or purchase or value
sale
in terms
price,
of or sale price? It makes no sense for a developer to do it. The only time it actually makes sense is for when the government steps in and offers that. Now, I'm not saying the government should step in and offer that. That's not what I'm saying. I am actually against it. There's other things that I think the government should do in order to intrinsically allow for affordable housing to be produced.
What would those things be?
Yeah, reduction in red tape, reduction in taxes,
increased competition,
increased competition,
immigration,
stuff like
so
that, right? Yeah, there's a lot of things that the government should be doing in order to allow for it. But at the end of the day, it's the same. Yeah, it's the same situation that what you're explaining, except that's just more concentrated, I guess, in a smaller area.
And there's one more factor that we have to talk about, which is the reason that tax credits don't exist for developers is because Canada hates developers. Canada hates the free market. Canada hates people getting rich.
Capitalism.
Hates capitalism. The idea of saying, hey, we're going to give developers a 25% tax break, or we're going to give them 25% of the build cost to build 25 out of 100 units, keep them affordable housing. We're going to give the developers that money. People would not be happy about that.
No.
Oh, they're already rich.
Yeah.
Oh, they don't need these tax breaks, whatever. So that just keeps the situation perpetuated over and over again.
Yeah. The people lobbying against the rich are actually shooting themselves in the foot.
100%.
Like they actually are.
Yeah.
Like make no mistake of it. I saw a quote or a clip of Dana White. and he was on a podcast with, I can't remember who it was. Doesn't matter. And he was on a podcast explaining how, young people in this next generation are so against billionaires and the rich and the top 1% and this and that. And he went on and said, who the fuck do you think runs this country? Who do you think is employing you? Who do you think runs all of this infrastructure, all of this industry in the country? Without that, you'd have nothing.
And how much does the entrepreneur, the business owner, have to do with the direction of how well a country does? In your mind?
It's all about.
Your influence is massive now.
All these people that complain about these billionaires and all these guys, who do you think's keeping this country afloat? How do you think this works, you dummies? Mm-hmm. Right? Where do you think this government money comes from? Where, one of the things, all you young people that are watching this right now, you don't want anything from the government. The only thing you want from the government is for them to stay out of your business. That's it. As less government as absolutely possible. If you think the government is ever going to take care of you and make all your hopes and dreams come true, you are out of your mind. It's not how it works. It's not how it works.
And then to go a little bit further, I get a lot of comments when I tell people, that I'm against unions and yada, yada, yada. And so people are like, well, then fucking leave if you don't like it. Or I'm against the Canadian taxes and the tax system, stuff like that. And they're like, well, why don't you fucking leave? And I'm thinking to myself, do you realize what would happen to this country if everybody, not even in my position, at the higher levels of the Canadian market would leave? Do you know what would happen to this country? It would just poof. Like, where are we gonna be left with?
Mass unemployment. No
productivity. It's hilarious.
Yeah.
Like, people have zero idea of what would happen to the countries that they are telling the top 1% to leave if they don't like it.
They're incentivizing them to leave in a lot of cases.
100%.
And then what's happening now is that because it's so difficult to operate in this environment, they have to give massive tax breaks to the battery plant, for instance, in Windsor is a perfect example.
What a fucking scam that is.
Pretty much
it's hilarious.
Is highly inflationary. From a business perspective, we talked about it. Probably doesn't really make sense to do it. I'm glad it's happening here because it's going to make our real estate more valuable.
Yeah.
But because they can't compete because our market's not free. It's not based on competition and supply and demand and keeping prices low because there's enough steel producers around the world to get stuff cheap. Everything globally is like so constricted that everything's so expensive that I need the tax break or we can't build this plant here.
Yeah.
That's why they threatened to bring it to Michigan because they had better incentives.
For sure.
So it's becoming a place where socialism is the government's hand in ownership, and that is a form of ownership in a way. Mm-hmm. And for some reason, people, like you said, they're scammed into thinking that this is good, but their standard of living is going down significantly. So what they hate is that, well, the rich people have a standard of living that's beyond measure, right? They've got their yachts, they've got 100 homes, whatever the case is, they can travel around the world. They hate that. But what they don't realize is that as the rich get richer, so do the middle class, right? And the rich is defined by your standard of living.
I was going to say, yeah.
Yeah. And it shouldn't be about, this is my favorite argument with socialism and capitalism, it's not equal outcome, it's equal opportunity. That's what we should all be arguing about.
Yeah.
Now, some people don't want to do what Jeff Bezos does or you do and work 3,000 hours a week, right? But what they do want is a nice standard of living. They want a home, a car, a cell phone at affordable rates. They want a little bit of savings. That's what most people want.
Yeah. Someone living on welfare today is living better than the top richest person back in the fucking 100 years ago.
No air conditioning, no hot water.
The standard of living is significantly better than 100 years ago from if you're even comparing the bottom of the bottom today versus the top of the top 100 years ago.
Average lifespan probably 50% lower back then. But the thing is like you said, they end up shooting themselves in the foot, which is happening right now, which is why we're seeing the outcomes, which we predicted years ago, which is, guess what, folks? You're going to be living in a rental property. Home ownership rates are going to drop precipitously. You're going to be a renter. You're going to own nothing. You'll probably end up leasing your car, renting your property, and will you be happy then? maybe the fight will still go on though. That's the thing, right? They don't see it in a way. So I guess, not to be overly negative, but how do we, right? Because our goal here is to like educate people to take advantage of the system that's broken. We don't advocate for the system, but kind of goes to what I was saying about the Amalfi Coast example there, which is we know that real estate's not going to be built anymore for the average person. So if you own the average home, if you own rental properties in Canada, and especially in major cities, maybe reconsider the idea of selling them. Even though times are tough right now, even though you might be a little bit negative cash flow, even though, you know, the prices have peaked for this cycle. If you can hold that property without going bankrupt or whatever the case is, maybe you should like try to not get scared out of it right now.
Yeah.
Hold it, weather the storm, because the fundamentals, which is all I can point to, right? I don't know about temporary fluctuations. I don't know when this rate cycle is going to end. I don't know if there's going to be a crash, whatever. The fundamentals tell me that we don't have enough housing. And that long-term prices are going higher because it's going to be even more rare to own a detached home. Mm-hmm. Nobody's going to be building them anymore. And if they do, they're going to be luxury. Mm-hmm. So why are we looking to sell these things right now? And another like fundamental factor too is just like everything else, cities get bigger over time, right? More and more people will get attracted to the city as immigrants coming in. They don't go to like Chatham or up north random city where there's no population. They get concentrated into major cities. Canada only has so many of them. So as the population grows, these cities are going to grow. They're going to attract all the population. So yes, we have a large land mass, but you can't just go build a new city. It wouldn't make any economic sense. It's going to be what they're trying to do now is densify the cities. So that's why these apartment buildings are going to go up. You can't build single family homes in the city. There's just no land. So you have to build up. You have to build massive units. You can't do that affordably, so you can only build rental units.
I remember a lot of people were telling me during all this this big push for real estate over the last, like, say, 5 years or so. A lot of people were telling me you should start like looking into Kingsville and looking into like, the markets around
tertiary markets.
Yeah, tertiary markets. And
Scary.
I'm not necessarily in opposition of tertiary markets.
Only if you can predict that they're going to become part of like the major hub.
The problem for me around here is that tertiary markets are a little bit. 1 second, fuck, I'm getting lit up. Costco's trying to get a hold of me.
No big deal.
Yeah, yeah. They need to confirm my banking information to send me payment.
Sick.
Yeah.
How much?
I'm not sure, to be honest with you.
Guess.
I don't even. Honestly, I don't know. It depends how. I don't even know.
Depends on the sales.
It depends on the sales. It depends on the amount of returns. It depends on. I guess, yeah. So the first intake of our product was for an 8-week cycle. And after the 8-week cycle, they start reducing the cost of it. But I'm pretty sure we actually sold out within like a couple weeks.
No way.
Yeah. So I don't think that it's going to be reduced. So I think this initial sale was like around $1 million, I think. Or this first order, around $1 million, the test order for the 40 stores, something like that. But
$1 million like gross.
Yeah.
And then, okay.
Yeah. Anyways, what was I saying?
Don't remember.
Oh, tertiary markets.
Oh yeah.
The reason why tertiary markets kind of I stayed away from the tertiary markets around in this location is because, and again, this is where boots on the ground matter and talking to people when you go outside of your own backyard, because I know a lot of people don't really want to live in tertiary markets around Windsor. Windsor isn't dense enough, big enough, expensive enough where it makes sense to even be in tertiary markets.
Yeah, like where you need to, I can't afford a house because they're $3 million, so I got to go to Kingsville.
Exactly.
And actually, it's a good point too, is the difference in price between Kingsville and Windsor, LaSalle, whatever, isn't that big.
Again, another factor. Yeah.
Especially when the market was peaking, the gap really closed and the prices were like, it's not much of a discount at all. And it's still not.
Yeah.
So you're right. It doesn't make sense. One thing that people got caught up on as well is buying vacation homes as Airbnbs and rentals. That never made sense to me. You're buying some property out on some lake in the middle of nowhere. That is not fundamentally sound. That's, I mean, it might work if you bought right, but you're really playing with fire.
This is, again, where, okay, I just got back from the Caymans not too long ago. Like, am I going to go on vacation in the Cayman Islands on the Caribbean Sea, or do I want a vacation on fucking Lake Erie? Like this is what I'm talking about, okay? Like
on a global scale.
Yeah.
Some people can't afford to go to the Caymans.
Fair.
They'll want to Lake Erie's fine. But globally, if you're going to buy a vacation home, I don't mind vacation homes, but it better be in like a vacation hub.
Yeah.
Like a global vacation hub. Like Amalfi is just cruise ship after cruise ship.
Is it really?
Yeah, like most of these places are, right?
Yeah.
It's just 3 cruise ships pull up, 3,000 people on each cruise ship get off, and there's your, whatever.
That's one thing. So the only argument. So we're going to be doing a podcast with the real estate god from Twitter, and he has a very compelling argument for investing in tertiary markets from multifamily perspective, and I'm really interested in getting him on the podcast with me and you. I think that'll be very interesting. So
I like that guy's posts. I'll say that.
Yeah. Do you follow him?
Yeah.
Yeah. So he it's hard to argue with somebody with a proven track record that comes from big private equity and big offices. It's hard to argue with that. And it's hard to argue with somebody that comes from the perspective of logic, where his logic is when he goes into tertiary markets, you can't predict markets and you can't predict macroeconomics. What you can do, though, is you can hedge against rising interest rates and volatility in the market by buying in tertiary markets that you stabilize for double-digit cash flow. Like, that's a solid business model to me. Now,
yeah, cash flowing multifamily in tertiary markets, different story.
Now the flip side of that coin is, Connor, this might be a separate podcast. The flip side of that coin is you're never going to get the appreciation that you will in Miami, right?
No doubt,
if you're investing in something. So you might sacrifice the cash flow in a city like Miami, but you'll be covered, right? The cash flow will cover you in volatile times. But real estate, like in my opinion, real wealth in real estate is not from cash flow. The only reason why you have cash flow, in my opinion, is to cover yourself during volatile times. And then obviously, cash flowing assets is, a big advantage. I mean, for me, I want the income, but the income at this point in my life is more so to, cover a significant appreciating asset in a great location.
Let me ask you this. If you had to choose one, let's say break even or negative cash flow, slightly property in an A location, waterfront, Miami, Fort Lauderdale, one of those types of places, or tertiary market, no appreciation, cash flow positive at whatever, 10% cash on cash return or something like that. There's no in between. You have to pick one or the other.
I'm going with the waterfront.
Yeah?
Yeah.
Interesting.
I'm going with the break even. But in the beginning of my career in real estate, I'd take the tertiary cash flowing.
Let's say it's not break even, it's negative cash flow. Let's say there's heightened interest rate risk, there's uncertainty in the market. Like, let's say right now, if you had to choose one.
I'm actually going after one on the water in Dania. I can't remember what it's called. I don't know how to pronounce it, but right in Fort Lauderdale area, like Holiday Beach.
Nice. We'll have to talk about that.
Yeah.
Is that cash flow negative?
It's positive. It's cash flow positive. Nothing crazy though. But man, would I take a negative cash flowing property? Probably. Mm-hmm. In an absolute banger of a location, yeah, probably. But it's different, right? I would do that for myself. Would I do that with investors as well? No, obviously.
Yeah.
But
you have to think too, if you have a portfolio of like whatever 100 properties and your cash flow of that portfolio is X amount of money per year, if you add something that's cash flow negative to the portfolio, like your portfolio is still cash flow positive.
Yeah.
So this is an advanced idea, not necessarily something for like a beginner to go, go buy.
You have to be able to cover it.
Yeah.
Like this is
that's the point.
This isn't like this
isn't a rule of thumb.
No. Yeah. This is the wrong answer. Okay, is what it is. This is the wrong answer. This is not an answer for, a newbie. This is not even for an intermediate investor. This is for, I'm in a different position in my life right now where if I buy a negative cash flowing asset, I can cover it. I have multiple negative cash flowing assets right now on the water. Yeah. This is not something that I advise whatsoever. I'm very well aware this goes against my fundamentals, but I'm going against I'm saying this against my fundamentals because I'm in a different position, and this wasn't the fundamental approach that I took in the beginning to get to where I am now.
Great point. So don't misconstrue this. And we do believe wholeheartedly that assets like this, limited, will appreciate over time. Because of money printing and inflation. It's inevitable. So that's why we do believe in appreciation long term. But when storms like this come, if you can't weather the storm, you're going to lose money.
Yeah.
Because prices fluctuate with interest rates. And if you're down right now and you're negative cash flow, you can't cover it. You have to sell. Now you're losing hundreds of thousands of dollars. Yeah. We're seeing it all over the place.
Yeah.